welcome to ForexTV.com. It's Thursday, January 24th. I'm Remy Hookey for New York Forex Market Buzz. In New York afternoon trade, Euro-dollar is at the 1.4750 level as of 1:35 p.m. Eastern Time. Sterling dollar is at 1.9737, while dollar-yen is trading around 106.70. In today's data releases, U.S. existing home sales fell 2.2% in December. The figure came to a slower than expected 4.89 million unit annual rate. Meanwhile, initial jobless claims fell for the fourth consecutive week, down to its lowest level in 4 months. Initial jobless claims declined by 1,000 in the week ended January 19th. The 4-week moving average fell by 14,000 to the lowest level since October. Joining me this afternoon is Greg Michalowski, Vice President of Trading and Liquidity at FXDD. Good afternoon, Greg.
Good afternoon, Remy.
Thanks for joining us today.
Hey, it's my pleasure.
Well, in the afternoon session, we're seeing equities back up in positive territory, but we've been seeing continued swings in the major indexes. And also in other news, in Washington, the Democrats and Republicans have reached a tentative deal on tax rebates here in the U.S. But taking into account next week's FOMC rate announcement and non-farm payrolls, while we continue to hear hawkish comments from the ECB, give us your forecast for euro-dollar, especially since the pair has breached session highs.
Right. As you mentioned, well, we all know the Fed's easing. They've surprised with the 75 basis point cut, and since that time, all you heard from the ECB officials is how tight or how concerned they still are in regard to inflation, and they will continue to be that way. And certainly, the Fed didn't get any help from the other central banks, apart from the Bank of Canada, when they cut their rates, and that seems to be what is going to happen. So as a result, the euro remains bid, and probably as we reach new highs here today, it seems like it's trading very well technically on a technical basis. We are nevertheless still in a range that's extended back to October, with about the 150 as the high point, 143 as the low. So although we're trading better, we're above a 21-day moving average that I look at. We held the 100-day moving average on the downside earlier. We still need to break through the 150 for confirmation to move in higher levels. So I expect the euro dollar to remain firm, and probably against the other currencies as well, like the euro yen and the euro sterling, will probably remain bid against those currencies as the ECB continues to show their hawkishness towards rates.
Okay, let's move on and take a look at the Japanese yen. Yesterday, the pair hit a low of 104.94, but the dollar is back up today against the yen, and we've been seeing a continued unwinding of the carry trade. So the question is, what factors should traders be focusing on when trading the yen crosses and also dollar yen?
Well, you said it. The carry trades. There has been a huge unwinding of the carry trades over the past. Well, really, it started in July-August period when something like sterling yen was trading above 250, traded all the way down to the 203 level. So that's a pretty big move, and that has influenced things like the dollar yen and the sterling versus the dollars, as well as the euro yen, Aussie yen, and stuff like that. So all the major currencies that go into that yen carry trade get influenced by when there's liquidation in those carry trade positions. We are seeing a rebound. We're trading at the highs for the day in sterling yen, for instance, and euro yen, and there is room on the upside for those pairs to continue to advance, and also for the dollar yen to show some advancement. We did hit as you mentioned, lows in that pair over the last few days, and it's good. We have to remember that in Japan they still have a weakish economy, and they're also export driven. So they need to, when the dollar goes down, it doesn't necessarily help them out that much. So it's we think that the dollar yen has room to bounce. We can probably get up to at least 108, 108 and a half. And if we are able to get through there, maybe go and test 109, 109 and a half on the upside. So it's looking fairly constructive for the yen. You might also add that the carry trades and the dollar yen are very much influenced by what happens in the stock markets. So if we get a rebound in the stock markets, it tends to bring in the people who want to buy the carry trades and see them go up. So as the stock market increases, expect to see dollar yen, sterling yen, euro yen, Aussie yen all to appreciate as well.
Okay, and if we could take a quick look at euro sterling as well as sterling dollar, rate expectations have been driving the euro against the sterling. So going forward, what do you think will be driving the price action for sterling against both the euro and the U.S. currency?
Well, they have a meeting coming up, and the minutes from the last meeting came out, and the vote wasn't as close as expected. Only one person dissented, so it's looking like that sterling, that going into the next Bank of England meeting, it may be not so much of a certainty that they're going to cut rates, but nevertheless, their economy is weaker. They rely on the financial markets for a lot of their growth, real estate as well. Not as bad as the U.S., but still has some problems in the real estate sector. So they're sort of in between the U.S. and the euro as far as whether they're going to whether they're more concerned with growth or more concerned with inflation. Might add as well that their inflation rate is lower than in the in the eurozone. I think the year on year is 2.1. They target 2%, so they're okay as far as the inflation goes. And so they do have room to ease, and we know that retail sales as well are also weak over there. So I'd expect the euro to benefit versus the sterling. The